People grab their seats, we'll get started. So good morning. Here's our last session before the big general session that finishes off the conference. Hopefully everybody has enjoyed this conference as much as I have. I'm Mark Lupi from HSBC, and I am on the Small Business Committee for CBA. I'm excited to have the pleasure to be able to introduce the final session, which is actually a session that is being sponsored by not only the Small Business Forum, but also by the Fair and Responsible Banking Forum as well. And clearly, we saved the best for last. I'm excited to have the opportunity to welcome our speakers, Matt Scarborough and Michelle McCartney, both from Bridgeforce. And if you don't know who they are, you probably need to. They have done some exceptional work in the consumer and small business consulting area. As CEO, Matt has led Bridgeforce to new levels of client services, expanding resources to both broaden and deeper company capabilities. Through his period of tremendous growth and diversification, Matt has expanded Bridgeforce's reach, adding new business segments and geographies to the company's portfolio, and greatly increasing both the scope and the scale of the problem-solving and implementation services the company can provide to its clients. Prior to becoming CEO, Matt led the company's international and capital markets practices, and the clients included some of the world's largest banks and investment firms. We're also thrilled to have Michelle with us as well. Michelle has nearly 30 years of experience in the financial services industry with a focus on effective delivery of project management and professional services. She has extensive experience managing the development and delivery of software and analytics products in support of consumer and small business lending. In her capacity at Bridgeforce, Michelle has established and managed project management office functions with some of the largest U.S. engagements focused on missions critical, including regulatory compliance, which is near and dear to all of our hearts, and operational improvements. Prior to Bridgeforce, Michelle worked for Fair Isaac Company, HNC Software, BasePoint Analytics, and prior to that, she was the principal and owner of Achieve Consultants. So clearly, lots of great experience there. So without further ado, let me welcome Matt and Michelle to the podium.
Thank you, Mark. Great. Well, thank you, Mark, for the kind words. I appreciate it, and thank you all for coming on the final morning of the conference, the very last slot of the track. So certainly appreciate all of you joining us this morning. So we'll kick things off, and to try to keep things hopefully a bit more interesting, Michelle and I will go back and forth a bit as we move through some of these topics. I'll set things up first, just a brief walkthrough of the agenda. I'm going to tee up, for those of you that have been and perhaps heard me speak on the small business track over the last few years here, we've talked about some of the challenges of sorting out what are the potentials of consumer regulatory rules applying to small business assets. And we'll talk a little bit about some of the context there. We won't spend a lot. We'll set that stage for a few minutes and some of the key issues around small business. We'll then also go through a little bit of the survey results. We did a survey on behalf of the Small Business Committee of the CBA to understand a variety of things around the practices around the industry. And in particular, I thought relevant for today's discussion are some things about how we define small business in a few practices. We'll have just a few excerpts on that. And what are the implications of it? How does that weave together with the rest of what we're talking about? We'll then roll through a deeper dive on several specific issues, and at the end talk a bit about, okay, now that we've laid all the problems out here, how do we position ourselves for success? Where do we try to take this from here? So brief background. I think one of the things that is very helpful here for small business is to also be looking at what's going around outside of just the small business compliance environment here in the United States. Because over the last several years, far more than earlier in my career, we're seeing very strong correlation between the regulatory activities in one asset class versus another, and even across national borders. When we look at what's happening in the UK versus the US, if I see something happening that in one of those markets and one of those asset classes, there becomes a very good chance that you start to see those same elements within the next couple years spreading across. And so when we look at that, I think you could trace back some of what we're seeing. We've seen this kind of echo back and forth across the Atlantic and move through asset classes. And quite often when I talk to folks focused on these issues within small business, in many cases they're not even aware of how much some of their consumer colleagues have already gone through. So I think that's part of a message you'll hear throughout some of this, kind of the good news, bad news. The bad news is I think as a small business lending community, there's a lot of work in front of us to make sure that we are properly addressing all these issues. The good news is in many cases we have great resources even within our own institutions to be able to, that we can leverage as part of that journey. So when we look at the details of what's going to play out in small business, there's lots of details that none of us know, but I think the trends, the principles are very, very clear, right? Across every asset class, whether you're talking lending, even in investment banking, on both sides of the Atlantic, you can see this trend of, along with this sort of higher duty of care to say we have to start looking out for the customer's interests some more, that element has applied far more on the consumer side than some other areas. But the error tolerance that says whatever standards we are held to, we have to execute against with extraordinary accuracy has held true across. And as we move to the key issues for small business, I'll hand off to Michelle.
Thank you. So Matt just talked about some of the regulatory trends across different asset classes. I want to talk about what does this mean for you as small business lenders. What I think it means is let's think about how deals have once been struck. I think the time of starting a small business loan with a chat on the golf course, evolving over to a quick review of financials, and then a gut feel to make that up or down decision, that's not going to fly in this regulatory world anymore. We need to move from what has been, in many cases, a less formal small business lending structure into a much more formalized, standardized structure. Now, there's no question that there's a substantial amount of uncertainty and to some extent some latitude about what in small business lending is really a business loan and what could be subject to the consumer regulatory requirements at all levels. But I'd say to you, just because there's no clarity, that doesn't mean that there's no responsibility. We have to act now and we need to figure it out. I ask of all of you, what is it going to take? Which one of you may have to incur a significant regulatory fine before the rest of us wake up and say, okay, maybe the rules aren't really clear, but there is something we can do about this. I went to one of the fair lending sessions yesterday with representatives from the CFPB and Department of Justice, and I want to share a quote that the CFPB director used in like the first 2 or 3 sentences of her remarks. And she said, quote, "Each supervised entity is expected to develop a strong compliance management system," unquote. How many times have we heard that this week? But I say to you, this is not restricted to consumer lending. This applies to all of you doing small business lending. So as an industry, let's not wait. Let's not wait for all the clear lines to be drawn. We can take action now. We can see what's happening in the consumer world and where the tide is going, especially with regards to things like credit reporting, FCRA, and a lot of the significant reputational risk items that could apply to your accounts, particularly extended to sole proprietorships. Now, extending on the discussion around, well, okay, I'm hearing you, but what is small business, what is consumer? Again, there are no clear, bright lines. It is a spectrum, but I think we can look at some characteristics of your business accounts to start to delineate what might be considered as a consumer transaction, or at least what your risk is of certain accounts being considered consumer when it comes time for a regulatory exam. If you look at the left side of the spectrum, I think we can quickly agree that the characteristics of those types of organizations to whom you're lending, C corporations, large numbers of employees, fairly significant lines of credit, and underwriting that's based pretty much on the business financials, pretty low risk that someone could come in and say, oh, those are consumer. But if you look to the right side of the spectrum, where you're looking at your accounts that are sole proprietorships, you have their business revenues could be less than some of the salaries sitting in this room. The lines of credit kind of look like the size of a lot of consumer credit extensions. And very importantly, you may be taking collateral that's personally owned and certainly making underwriting decisions based on the owner's business credit. Those really are at high risk of being characterized as a consumer transaction with regards to the application of consumer regulations. So you may be sitting there saying, okay, Michelle, I hear you, but what's everybody else doing about this? Well, I'm going to turn to Matt to give you some insights from a survey that Bridgeforce did with CBA to help answer that question.
So one of the big challenges in small business is simply defining what is small business, right? I mean, in many organizations, that answer is candidly sometimes a residual. It's defined by what isn't large commercial, and we end up all over the place by that definition, as we'll see in a moment. So quick background on this survey. So we administered this late 2014, early 2015, and we had a great mix of institutions that took the time to respond. So when this particular pie chart's looking at it by asset size, and everything from institutions less than 10 billion to those more than 250 billion, we had a good representation out of kind of each slice of the pie. So now when we look at the questions about how do we define small business, I'm going to start with one area that we actually had a good bit of consistency, because we asked this in a couple different ways. So one was, how do you define small business in terms of your capital side, right? The finance and treasury aspects. So think about, say, your Basel III rules, for example. And in that case, how we treat small business loans for capital purposes, the industry was pretty consistent, and it was very consistent for all the large players. So every institution over 100 billion answered essentially identically, and that's the piece where you'd see saying that they treat it as a mix of retail and wholesale, and the specific mix being aggregate loans under $1 million getting treated as retail, over $1 million getting treated as wholesale. But again, that's only on the capital side. So when we're saying how much capital do we have to hold, we have a great deal of consistency. Among the smaller institutions, there were some that used that exact same rule as the larger institutions, others that said we treated either all retail or all wholesale. And this, honestly, interestingly, was the only question where the answers were very correlated with institution size. On everything else that you'd see, some of the different patterns could be varying greatly, and there was no pattern that says, oh, big banks do it this way, smaller banks do it another way. But on the approach to regulatory capital, and probably no surprise due to the Basel III rules affecting the larger players, you saw real consistency here. But now, let's move to thinking about how do we define small business for purposes of how we're organized and operating our business, for purposes of defining our products, reaching out to our customers. And there, I was expecting a lot of variance. Honestly, the variance was even greater than I expected. So having been around for this for a while, we knew that folks use a bunch of definitions. But let me help you read this, because this is confusing, and honestly, that's kind of the point. I'd start with the middle, where you look and say, how do folks define it? Do they define it based on credit exposure? Do they define it based upon revenue of the entities, or some combination of the two? And so if I go now to your far left, there you're looking at it where, for those that were using credit exposure, either entirely or as part of a joint measure, the most common answer was $1 million. So anything under $1 million being considered small business, over they'd start to go large commercial. But you see there were answers at a number of levels, everywhere from 250,000 to 10 million. When we move over to customer revenue, we're really, as an industry, all over the map, right? Everywhere from 1 million to, and even the one at 25, depending on their business lines, that 25 could be even higher, right? So when you think about the difference between a small business that has $100,000 in revenue versus 22 million, very, very different entities to some of the points Michelle was talking about earlier, the likelihood of thinking about consumer regulations applying to it as well, certainly vary quite dramatically in there. And as we would read through the descriptions from folks as to how they're organized, and in many cases would include even some insights a bit on why, there's no wrong answer. Right? Everything on here can make perfect sense, because for each institution, for each set of clients that they have, this can make perfect sense. But when you combine it with some of the uncertainties of how regulations apply, and we're not even sure exactly how we define it, adds to our complexities. I'm going to add one more layer of complexity, and then we'll start to pull some of it together. So next question was around how we're organized in terms of kind of our company's org charts, and how much independence and control does the small business line have over its own operations. I'll start you with looking to your far right, the independent. So that small minority, those are the institutions where small business really had a chunky bit of its own capabilities, right? Where it's got a P&L head, it has a lot of its own operations. It's really a fairly highly independent entity. At the far right, we're pretty fully integrated, where in many of those cases, you may not even have a P&L leader, no dedicated salespeople. Small business products are just kind of included in there with the rest of the consumer set, and folks try to sell that when they see the opportunity. Most of the industry is in that spot in the middle, where it's this mixed business going on. Most commonly there'd be a P&L leader and perhaps some dedicated sales folks for trying to generate things, but then the rest of operations, collections, et cetera, was some mix of maybe some independence, but a lot of shared services. So, other relevant context off of this. When we looked at questions of saying, do folks use early warning models, and if so, are they using the owner's personal information in them? And most institutions were using various predictive models to try to identify risk, not surprisingly, and over 90% of them are using consumer information in that. And that makes perfect sense. It's highly predictive. I mean, they should use it, but it also comes when, particularly, and as we'll talk about later, some of the things, when we look at the consumer side, how much scrutiny there is on good use of data from usage, reporting, et cetera. We're using a lot of consumer data here, certainly becomes one of the spots that bleeds across. You are seeing some respondents already starting to give consumer treatment to small business assets when they pull it into collections, particularly if they have a consumer guarantee attached. That's certainly a minority of the industry at this point, and this is the first year administering the survey, so we don't have trend data. I'd be pretty confident, though, if we had looked at that 5 years ago, it would have been pretty close to zero, and that if we were to trend this over future years, we'll see that rise. And certainly one of the things we didn't have in this year's survey, but will present additional challenges across this, is as you look at new entrants and folks striking partnerships with the different technology-enabled sort of startup lenders, there can be some neat opportunities out there, additional things to think about. So what's the commentary on this? The point is there's so much variation, there's so much complexity of how each institution defines small business, of the regulatory complexity of where that's ultimately going to land, of how we're organized. Everyone in this room is so different that I think from a regulatory perspective that the regulators aren't exactly sure how to define where all this should apply either. But I had a conversation last night during the happy hour with somebody from one of the regulatory agencies just to kind of confirm some thinking. And the sense was very much what Michelle was saying earlier, which is we don't know exactly where it's going to land, but the absence of clarity is not the absence of a duty. It's actually an opportunity to define it yourself in a way that makes sense, so that you can look at it and say, okay, what of this feels like that these are really truly sort of consumer-like, what don't, and make your own good faith judgment, record why, and act accordingly. And I think to the extent that we don't do that as an industry, it really raises the risk of a one-size-fits-all solution later, which, given the complexity of this segment of the industry, would be really challenging. So we're going to dive now into a deeper dive on specific regs, but I may pause for just a moment here first on any questions on things so far, and then we'll obviously take questions again at the end when after we dive through some of the regs. No? Okay, that's fine. We'll go ahead and roll on. I'll hand back to Michelle as we start to deep dive into some of the specific issues.
Thank you. So as Matt said, I'm going to take you through the highlights, just hitting on a few things with a handful of laws and regulations, how we see them potentially affecting small business, and where I really want to spend time is with each one, have you think through some questions about your current operation and what you may need to take action on going forward. So no question, the CFPB is very highly focused on fair lending. We had a fair lending forum, a CFPB forum, lots of focus on that this week. I think we can see the direction of where it's going with the recent Dodd-Frank 1071 amendment to the ECOA to include tracking of business loans. Now, even though the rules aren't written yet, and I am going to talk about that amendment in a few minutes, the direction is clear, and I think the message is clear that fair lending is not just for consumer underwriting anymore. I pulled out a few actions that the CFPB can do today that are itemized down below, and I just want to zero in on a couple of them. First one is that the CFPB can recharacterize a business transaction as a consumer one based on primary purpose, some factor analysis, or use of the loan proceeds. So, for example, when you think about primary purpose, if you have extended an open-end credit account that is used for both personal and business purposes, it is not considered business credit unless you can establish that the primary purpose is in fact business related. Now, there's no precise test for what constitutes primary purpose, but you can look to some CFPB official commentary with some 5 factors that they called out as guidelines to consider within your operation. And finally, with mixed use of proceeds, if you do have a credit extension that's going to be used for both business and consumer purposes, I would err on the side of treating that account and that transaction as a consumer account. The bottom one I also want to zero in on is that the CFPB can enforce federal consumer laws as being applicable to small business and commercial credit, specifically ECOA, where just like with consumer, you need to think about things like the prohibited discrimination factors, adverse action, and don't forget about signature rules. Be very careful about asking for a spousal signature on an account, especially in the case of a female-owned business, unless you're doing it for reasons of jointly owned collateral being used for the loan. FCRA, I'll talk about that in a few minutes. And truth in lending, one application here is just as with consumers, you cannot be sending unsolicited credit cards out to business in the absence of an application. What I really want to talk about is what does this mean for your operations today? So I love audience involvement here. So I'm going to be asking some questions, show of hands. We don't get enough show of hands. I may ask you to stand up. So first I want to know who we have here. So who among you is responsible for some aspect of a small business operation, be it origination, account management, collections, et cetera? Raise of hands. Okay, a few of you here. And how many of you are more involved, let's say, on the compliance risk side, maybe a second line of defense? Even more, okay. Well, for those of you who raised your hand in the second category, think about your colleagues in small business, and maybe you can raise your hand for a few of these. Let's talk about underwriting. For those of you who are in the small business lines, how many of you use an automated underwriting system today? Show of hands. How many of you still use a more manual approach? Okay. The manual outweighed the automated. Something to think about. With manual processes, you leave yourself exposed more to disparate types of decisions being made. You don't have the ability to track as easily the types of decisions you're making, the data that was used, exceptions to policy, et cetera. Whereas an automated system, you can bake in more objective criteria that are based on very objective factors in the loan. Written policies and procedures. How many have written policies and procedures for how you make a loan? Okay, a few more hands, good. This is really important. You need to have very clearly written policies and procedures. How many of you review those on an annual basis? Good, good. Compliance folks, take note. Again, I'm probably going to say this 3 or 4 times as I hit each of these laws, but I can't overemphasize documentation is so critically important with regards to your compliance and being able to show that as evidence of your operations to examiners. With regards, another point in underwriting is how do you manage override decisions against policy? So you need to think about, do you have very clear guidelines for when someone can make an override decision? How are you tracking that? And who is reviewing those overrides to ensure that you're not deviating too far from policy that could lead to discrimination? How many of you are using any type of a small business scoring model in your underwriting? A few folks, okay, good. That's great, but if you're using them, then you need to make sure that on a regular basis you're testing and reviewing those for lending compliance. And how many of you are using consumer credit scores that might factor into pricing? Okay. Likewise, you need to think about what are the disclosures you're making to the consumers involved in those transactions, and again, have very clear guidance and substantiation for how your pricing is being set and incorporating those consumer scores. Let's move to talk about vendor management. If you have any third parties who are administering certain products on your behalf, then everything that you may have heard from us yesterday in vendor management applies here with regards to having appropriate controls and monitoring in place to ensure that those vendors acting on your behalf are adhering to the same regulations to which you are subject. How many of you have a formal complaint process for small business? Good. I would hope to see a lot more hands on that because complaints are an area where the CFPB has a laser focus. You need to have a very clear procedure for how are you receiving the complaints, what is the workflow to ensure that they are addressed both in a timely manner and a complete manner, and how are you monitoring to ensure all of that is happening. And finally, how are you communicating decline decisions to small business customers? I know the ECOA is a little, gray in terms of exactly how that can be done in a written way or in a verbal way, but I would certainly encourage as much as possible written communication that is consistent and has, of course, all the applicable regulatory disclosures. Now let's talk about FCRA. So this is pretty clear. If any part of your origination, underwriting, account management, other aspects of servicing of small business accounts includes the acquisition of a consumer credit report, then all of the applicable provisions that your consumer colleagues face with regards to disclosures, authorization for permissible purpose, reporting, et cetera, apply to small business. So let's talk about, again, going through a series of questions, what does that mean for your operation? With regards to permissible purpose, how do you ensure that you're receiving the appropriate authorization to pull the consumer credit report? How many of you may accept verbal applications for small business? No hands, that's great. That's great, you all got an A+ for that one, because obviously you can build in the authorization to a written application form. How many of you are pulling small business credit reports for your loans? DMB, SBFE, Experian Business? Okay. While the vast majority of those products are focused on business financials, I think there are a small number that could include some consumer credit information, so just be aware of that. When you're pulling consumer credit reports, you have to have the same procedures in place for verification around fraud and active duty alerts that your consumers do. How do you handle that? How many of you might be using any what I refer to as specialty CRAs, and I mean like check systems, early warning, ID analytics, et cetera, for opening a deposit account or other types of accounts? Okay. The same rules apply here. The same approach that you take with regards to permissions, and if you're furnishing data, the data accuracy as you do for the traditional consumer credit reports applies here for the specialty ones as well. How many of you are furnishing data to the consumer credit reports on your small business accounts at any point in the life cycle? None, okay. We do see some lenders will report the small business accounts to consumer credit agencies. They may not do it over the entire life cycle. They may do it when the account goes delinquent or at charge-off. If at any point in time you elect to start doing that, I would suggest you confer first with your colleagues in the consumer lines who are reporting and ensure that you have the appropriate processes in place to determine that the data you're sending is accurate and that you have the appropriate monitoring to catch any changes that could put you at peril of furnishing erroneous data. What goes along with credit furnishing or credit data furnishing is also disputes. So once you start reporting to the consumer bureaus, you'll need to have some dispute processes in place. And I think Matt now will talk to you about UDAAP.
Yeah, and actually, even before I go to UDAAP, and there's some relationship in some cases between the UDAAP and FCRA, I want to hit just a little more commentary on that. When we talk about being able to draw lessons from the consumer side, I'll say from a Bridgeforce perspective that sorting through all of the issues related to credit bureau, the usage of furnishing, the disputes, et cetera, has probably been the single most common area of need across our entire client base on the consumer side. Done that again and again, and it's one of those things that when you first look at it at 30,000 feet may sound simple, ends up being a lot of work. So a couple points there. One would be to make sure, really look to some of your consumer colleagues on those, be able to learn from what they have. We did a long full session just on credit bureau practices on Monday morning. Certainly if anyone's interested, shoot us a note, let us know, we'd be happy to send that out. Some other comments along here. So what Michelle was talking about that clearly applies under existing statutes is when you're using consumer data, right? Yep. In addition, some of those things like you mentioned SBFE that are thought of generally as business data assets are, I know for a fact from that SBFE is already looking at this saying they're running on the assumption that these sorts of consumer rules will ultimately end up applying on the small business data as well. So they're already, and I think being very smart on this one, they're getting ahead of the curve to say, let's make sure that we are on top of this and assuming that it will be subject to it as well so that we're ready for it. So even today, some of the things that may be small business assets, because when you think back to the first part of this, of talking about, but is that really business or consumer? I'm talking about a sole proprietor, 0 employees, information on that is so highly correlated with that person. Is that truly separate commercial information? So I think on the FCRA side, it's not only, in the moment, what we're certain of is that which is already seen as consumer data, but even that which is business data on small businesses may come in under that over time. All right, so UDAAP. So don't generally read a lot of quotes off of slides as I kind of have them up and just talk to them. I'm going to read part of one of these. So, because this, even before CFPB, so this particular court case from back in 2008, when a fight with the FTC, where the court's position says that small businesses and religious and other not-for-profit organizations are consumers and are entitled to protection from deceptive and unfair acts and practices, right? Very clear. So UDAAP violations are something that can end up applying across small business, and of course UDAAP can mean essentially anything, right? So anything that starts to feel unfair, and some that Michelle highlighted already of talking about the common pitfall on the spousal consent requirements, other things with respect to late fees, pricing, some of the challenges where there's been issues on the consumer side. And then even on the Bureau, I think one common practice that the industry will have to sort out where UDAAP could come to play on small business Bureau usage is, I think the most common usage for small business is we use the data, but we don't report back on it, right? Or if we do report, we only report negative data. We report it when they're 90 days past due or when we're going after the person's home if we have to go after the personal guarantee. And so when there have been certainly spots on the consumer side of folks that did not report fully, and there has been a view that says, is that really fair? Because now I'm not helping my customers to develop their credit, I'm only dinging them if it goes off. I think the historical practice there has historically made sense, but it's something we're going to have to review and think about and have a thoughtful and defensible position. It could be a spot where kind of UDAAP and FCRA end up coming to play together.
So I already briefly mentioned Dodd-Frank 1071. Now, you may say, okay, the rules aren't set, I don't need to worry about this. And I will say, yes, you do. Yes, the rules are not yet defined, but I think there's some planning that you as small business lenders can do to get ready for when the rules finally are published and you need to start reporting. Section 1071 of Dodd-Frank is considered to be the initial step towards bringing greater transparency to small business lending, as we've seen in mortgage lending. We can only look to how the law is written, and I have the list of likely data elements listed here to see what kind of data you're going to have to be in a position to collect and start reporting on. So I would suggest to you to look at, you're off the hook on the verbal applications, because here I would say if you were taking them verbally, how are you going to collect this data? But look to your colleagues who are collecting HMDA data today. How are they doing that? What are the processes they have in place to gather the data, to ensure the accuracy of it, to report it as is required? The CFPB has stated that they are learning from their work in implementing Dodd-Frank Act changes to HMDA, which concerns a similar information and collect and reporting system as what's contemplated here. Now, there's an open question regarding how widely applicable this is to commercial loans, so I would suggest, band together with your wholesale banking colleagues as well and talk about how would you collect this data. A lot of the things I talked about with regards to the fair lending and your operations apply here. Look at your policies and procedures that will need to be developed. Do you have your whole application workflow documented in the form of a process flow where you can then start to identify where you're going to collect and validate the data? What about your systems that you're using to originate applications? Do you have the data elements available to capture this data today? How many of you could go get this changed in a month with your systems people? That's what I thought. Somebody raised their hand. I want to know who your systems people are. So these things take time. And again, it may not be crystal clear, written in black and white, what you're going to have to capture, but there's no question it's going to have to be done. So start having those conversations now about how it's going to be done, what systems need to be modified, et cetera. Another area to think about is, do you have a second look process for denied credit requests? Specifically, as this starts to get implemented, do you have a second look process that can ensure that minority and women-owned businesses get all due consideration? In the area of HMDA and CRA, your first reaction may be, well, you know, HMDA, that's for mortgages and consumer. I don't need to worry about that. Let me share with you another quote from the DOJ representative yesterday who said, redlining is creeping up as a significant issue. Frankly, I was a little surprised. I don't know if I'm out of touch, but I thought redlining, you know, wasn't so much a problem now, but it seems to be, and when the Department of Justice says it, I took note. What does that mean for you? Well, when examiners start to conduct a redlining exam, they will look at the record of CRA small business lending in your institution to see if there are any significant disparities that would cause alarm. Pricing is another area where the regulators will look at several risk factors in terms of how you've been pricing small business loans. There's another quote I want to share with you. I promise this is the last one from yesterday's session. They said, it's in the space of discretion to set prices where disparity has been found, but you need close monitoring. And they emphasize the whole area of pricing is a fair lending concern. So I started this review of laws talking about fair lending, applicability to small business lending, and we kind of come full circle here. Pricing is just another area where the regulators are going to zero in on several risk factors. So again, I'm sounding like a broken record with regards to documentation, override policies, et cetera, but all of that applies to an exam with regards to fairness and pricing as well. So now that we've walked through a number of regulatory issues for you to consider, how can you take this away and become a compliance success story within your organization? I'm going to talk through just a few immediate actions that we think you can take, and then Matt will talk to you about some longer-term actions. First thing you should do is take the information we've talked about here today, go back to your organizations, and conduct a risk assessment. Look at what are the consumer regulatory expectations that could be applied to small business lending. Where are some best practices currently in place that you could capitalize on? What are some of the gaps that you have? I'll tell you that within Bridgeforce, we go out and work with a number of clients, and oftentimes we are asked to look at different issues that go across business lines. For example, FCRA compliance. And I have to be honest with you, a lot of times some of the major weaknesses, the largest weaknesses we find are in the small business areas. So this is an opportunity for you to consult with your consumer colleagues and again, identify best practices and get things in line now. Another area to think about related to this is analyze your data, the data about your operation, and know what it means. You should know more about your data than the examiners do. And you are going to be called upon to provide data to the examiners. I think you had an interesting conversation around that. You want to share that?
Yeah, sure. So another just kind of live updates from conversations yesterday, and realizing, and as the 30-second tangent, I've done a lot as part of my Bridgeforce career over the last decade and change, a lot of risk strategy engagements where you're getting data sets in to be able to go ahead and evaluate lending, pricing, whatever it is you want to do. And I'll say that in the course of a lot of data sets over those years, certainly hundreds, almost never does it come across perfect the first time, right? There's some questions on exactly what's this mean. Oh yeah, that field was a little off, and it ends up being a second run, and it's a process a few weeks long. And when I started realizing how statistically focused the CFPB was and talking to one of their folks, and it obviously and immediately touched a nerve on just how much that can be a challenge. And I honestly took it back through my own career. So I think one of the clear best practices would be make sure, and we actually do this with some of our clients, anything that you are going to send out as part of one of those exams, have somebody else review it first, whether it's a third party, whether it's other people inside your organization, but make sure that you know what it's like to receive this data, it's properly documented, it's all just right. So now the statistician on the other end is loading it. You've made their life easier, and it just helps to lower everybody's blood pressure as they're working through it. So just kind of one small but significant point, because there is sometimes an art to the prepping for the exams, that you want to build trust at every interaction with the regulators, make their life as easy as you can, and then that way you can quickly get to what the real issues are and trying to work through this. So.
Thank you. Another quick hit is to look at how have you defined small business and consumer. We've given you some information here today. You probably have a variety of policies and procedures throughout the organization. Pull those together, consolidate them, strive for an enterprise-wide standard on what is defined as consumer and small business, and implement that. Consistency is really key with the regulators. Another action that you can take is to conduct a review of your first line of defense and all the various monitoring and reporting that you have to ensure that the execution of the various policies and procedures that have been defined is working as it should. Identify where you have best practices, where you have gaps, and then once you've identified those gaps, go develop an enhancement plan and start building out additional controls and monitoring where it doesn't exist today. Now, you may say, Michelle, that's not a quick hit. That's going to take some time. Yes, in some areas it might, but at least start with the plan. Get that plan documented, because if you have an examiner show up on your doorstep, even if you don't have all that monitoring in place, to show that you have very deliberately thought about it and established a plan that you're executing against is going to put you in a much better standing with them than if you had no plan at all. You know, we're really, the essence of what I'm saying with some of these short-term actions is don't wait for the regulators to tell you whether or not you meet their baseline. You want to get a few steps ahead of them and be prepared that when they come knocking on your door, that you can tell them, hey, I not only met your baseline, I've exceeded it. Yeah.
Yeah, absolutely. And then after you've gone through that assessment, then you can start the effort of fully building out the compliance management system for small business to meet these various things. And as part of that, you know, once you build out the CMS, in some ways that is a bit of a tip of an iceberg, right? Because you start identifying issues. You identify issues, the gaps that have to be closed, things to be remediated. And ultimately out of that, you'll end up re-engineering a number of processes, typically first internally and then in parallel or perhaps after with that on the vendor side. And I feel like, I know we've laid out a lot of things that are going to have to be done. I think the good news out of this is if you can start on it where you're taking the initiative, this whole process is so much better. Because I'm a glass half full person, and when you look at this, if you're doing it where you have a little more time, ultimately, what's all of this really mean? It means we have to really understand our customer process, the customer experience. We're making sure that our policies and procedures are what we think they should be, and that all the activities in our business are exactly adhering to that set of policies and procedures, behaving the way we should. So ultimately, once we come through, it can be a painful process to get there, but once we come through, we have better insight and control and the ability to have better customer experience and loyalty than we would if we didn't go through this. I can tell you from a Bridgeforce perspective, having been involved in a bunch of engagements with institutions of various sizes on all sorts of various regulatory issues, if you self-identify and you're on it yourself, it's such a better process. It's way less expensive. It's way less disruptive to the business. And when I say less expensive, I mean 80 or 90% less expensive a lot of times. When folks wait too late and then by the time they're taking action as a result of 5 MRAs and some consent orders and whatnot and some nasty deadlines, that's highly disruptive to the business. So I think the good news for small business is you've got a great opportunity to be able to get ahead of this. I think it's coming. I think it's very clear that it's coming, and it's something that you can leverage the kind of the pain and learnings of others. So with that, let me pause. Let me go ahead and stop, and we'll happily take questions with the remaining time. Or is everyone saying, I've asked all my questions this week, I'm done? Okay, no, great. We've got one here up front. Microphone coming for you.
Thank you. You talked about 1071 and the data fields we're waiting on. What's kind of available right now that we can use or CFPB could use to kind of be HMDA-like now, to be thinking, you know, from a redlining perspective, we can use the addresses of small business to be able to say, hey, what's percentage in high minority tracts versus non-high minority tracts? But as far as capturing data to say, you know, how am I doing in the protected classes, what's available now to be able to start that process?
So I think in terms of from a kind of template perspective, we look mostly at the HMDA data collection. Mm-hmm. So are you asking in terms of to try to figure out what sort of data should I be collecting, or in terms of how do I get it?
Well, you're just talking about trying to be proactive, and to me, a lot of the work is, you know, if CFPB's coming in right now and starting to think, hey, I'm going to start doing some fair lending reviews, I'm just trying to think, what is the CFPB going to use today to do those fair lending reviews? If we're right now, you know, on a small business loan, I'm not collecting race and ethnicity data, so it's like, okay, well, what is it that I can do? Am I supposed to be trying to do some proxy information? What is going on today before the 1071 comes in?
Yes, okay, so on the proxy side, so certainly to the CFPB's credit, they've certainly published out their proxy methodology. Now it's got a lot of challenges to it, and you can read, and there's some good work done by others. I believe Charles River Associates that did some work specifically focused on kind of issues with that. So it's certainly highly imperfect, particularly for some ethnicities and others. That said, until we hear other guidance, seems to be what CFPB and DOJ is using in the absence of sorts of real data. So I think we're all hoping that one will evolve. But for the moment, to that direct question, I think, you know, the guidance is out there. They've described it pretty fully as to how they're doing it. Everybody knows there's imperfections in it. That's one that we certainly will hope will continue to evolve. Over time, I think it becomes how do we start to collect that for ourselves? And although, to Michelle's point describing it, we don't have great details on what that's going to look like, but they have given us guidance in the sense of saying that you can look towards the HMDA data collection for what ultimately we're going to be looking to collect.
Thank you.
Sure.
I have a question on the second bullet point under immediate actions of establishing an enterprise-wide definition of consumer. From a legal perspective, that makes me hesitant a little bit because so many of the regulations themselves define consumer. So how do we coordinate if we were to establish an enterprise-wide of who should be treated like a consumer without either making that contrary to the regulations or too expansive? And so I guess I'd like a little more insight into what that looks like and what you mean by treating as a consumer.
Yeah, so and maybe it's not clear from the bullet, but we're really talking about, of those products that you would put out that are small business products, what of those are consumer-like? So, and I think there's lots of discussion as to how to define that. So I know some institutions that have moved that way have said, we're going to take all sole proprietors and we're going to start to treat them as consumer-like and extend consumer protections to them. Some have looked at it and said, if there's a lien on somebody's primary residence and it's under a certain value, that if we go to enforce that, all right, we're having our consumer operations handle that to make sure it's done in the way that affords all those protections. And I think, you know, I know one example where a client had was an SCRA situation where an examiner was looking at it. In this case, it was a small business card product, and the situation was a person that was a sole proprietor. Then they were also in the National Guard. They'd been deployed to Afghanistan, and the regulators looking at it going, really, this person didn't get SCRA protections? Kind of, does that feel right? And so it's not clearly defined yet, and that becomes some of the point. And I think in each organization to look at it and say, what feels like such small business? I mean, I remember 20 years ago when I was at MD&A, we used to have some of these sorts of discussions where, on that case, it was a flip side. We had a big consumer portfolio that was business for self, even though it was called a consumer card, and you go, you know, how much of this is really kind of business card? Yeah, so there are those gray areas, and to the point early in, every institution's so different. A one-size-fits-all definition is say, of that subset of our small business world, how many do we need to look at and go, well, that's pretty highly personal, and what's going to pass the that feels right test? And I think some of the point that we were having earlier is we don't have great clarity yet of exactly how that should be defined, but that doesn't take away the need for us to look at it and use our own good faith judgment and document why we use that judgment, because to the point is we don't have perfect clarity on that yet, but we'll be far better off to be able to have the conversation with our regulators and candidly with ourselves and our customers to be able to look at it and say, hey, we made a thoughtful decision based upon this. We thought that was right. If in the future we get different guidance, fine. But the presence of that thoughtful set of decisions and criteria is going to be way better than going, we never thought about that. Does that make sense? Yeah.
This might put you on the spot a little bit. The session right before this was kind of the digital space.
Okay.
And we know from a small business standpoint, there are a lot of non-bank lenders sort of in that digital space. Obviously, that's going to continue to grow. I don't know maybe you have some thoughts on what you think the impact will be overall from the market, how it might impact banks as well, getting into that digital space for small business?
So you're talking overall market impact of those sort of new entrants? What?
Marketing, but there are actually companies out there that are doing small business loans in the digital space.
Oh, right, yeah. Well, and I think, so I see a lot of that. So most of our work, the vast majority of Bridgeforce's work is with depository institutions of one form or another. But we do a significant minority of our work with non-bank lenders, often that are portfolio companies of our private equity clients. We've got a bunch of sort of the Wall Street PE funds that have been all over these sorts of entities. So I've seen a lot of them. And I think that there are some interesting and novel things being done by some. In many cases, candidly, they're just willing to go into a risk place and pricing place that depository institutions aren't comfortable. So as you start to look at relationships with those and going, all right, do I feel okay having a partner there with a 70% APR on an unsecured, small business loan? I don't know. So I think that over time we're going to need to see, because it is one of the big displacements that's happened from this whole regulatory situation, is whether you're talking about, and this is probably even more true on the consumer side than it is small business, but the riskier stuff has disappeared out of the depository institutions and gone to non-bank lenders. Eventually it's going to have to come back, because those consumers will be better off with far better pricing if depository institutions get comfortable again at making a loan that's at 22% interest, because otherwise they're going to be at one of the startups at 80. I think that some of those startups are being very cavalier about the compliance implications of their business. And some of them where I've had face-to-face conversations where they say, oh no, that doesn't apply to us. We're not a lender, we're just a marketplace. Good luck with that. And so I think some of them are going to get some real surprises. Some of them are trying to do it right from the start, but I think that there will be several of those players that get some real surprises.
I wanted to kind of expand on that. I'm a member of Bridgeforce as well, and what we've been having dialogue with those particular lenders about, and with our clients, is to say, hey, we shouldn't look at it as are they our competitors, but what they've built is technology platforms that allow you to access and better serve your customers. So for example, some banks have decided to partner with them from a platform perspective or from a marketplace perspective. So I think this is really more of a play of understanding how you can work with other types of either technology providers or marketplaces or sources of new customers, and finding the one that might fit well. It also might allow you to test into some of these new areas and see if it is a fit for you. So rather than seeing it as black or white, we kind of see it as a way similar to an Apple Pay, where you are cooperating with technology providers, because they do view themselves as technology providers and not lenders, which is kind of interesting, and especially since a lot of them are based out of California, they're going to get some really interesting calls from the regulators.
Yeah, I agree. I think it's a real mix out there. I think some could be great opportunities to partner with, and others are being pretty cavalier. So just be careful. Yes?
Pushing the proxy question one step further, have you, knowing the perils of the BISG process, have you seen anybody doing those proxy techniques on the owner of the business and where their residence is? Or is it based on, or are they using the location of the business, which could be two entirely different things?
I have not seen, I personally haven't seen folks doing a bunch I see somebody with something to offer up front. So my experience on looking at some of those proxies, candidly, my personal experience has been outside of small business. So I don't know the answer to that question, but it looks like somebody here does.
In our organization, what we've done is we have indeed looked at the proxies or the owners, the owners of the businesses, and then used that information, the name and address of that owner, to try and determine what their ethnicity and race were, and we used that as part of our analysis, and it was revealing. Separately, we then plot the business address for a redlining analysis. Yes, the principal's personal address as well as guarantors on the loan. And then we had as many as 8 guarantors in some loans, so we had to come up with our own methodology for determining how do we classify the loan when we have a mixture. So,
I'm not sure, where are we on time as far as, I'm happy to take more questions, but I want to make sure also, you got 2 minutes? Okay, great.
Just real quick, you can also geocode, look at and geocode and pay attention to risk assessment and see where your hot spots are to focus. And I would probably work with counsel on that because you may have to deal with the issues that you find.
All right. Any final questions? Okay. Well, thank you all. Appreciate you guys coming here on the final morning.
Matt and Michelle, thank you so much. That was terrific. So yesterday we heard at the general session that our role in regulatory compliance has a huge lack of clarity. So I think we just heard, tomorrow the most valuable presentation I've seen in the whole conference is really, here's the checklist of what you should be looking at your organization to make sure you have each of these items covered, and you're going to put a stake in the ground to be able to show a regulator, we've thought about this, and this is how we're addressing it, because there's no right answer. But at least what you've been able to do for us is really take pages and pages of regulatory requirements and put it into a few slides that we can then take back and really have good conversations around. So good news, all of these slides will be available online when you get back to your office, so you will have all of these. I know people have been taking pictures, but hopefully we'll make it a lot easier for you because you're going to have every one of the presentations that have been done. But I think these are going to be some of the most valuable slides. I know that we had Matt come to the CBA small business meeting, and the minute I got back to the office, we got a chance to look at these, and we went right through them one by one to make sure we were covered. So phenomenal work. You made our life a lot easier. I feel that there's a little bit more clarity going forward, and look forward to making that even better and better. So thank you.